Hey Jeff, welcome to another video for Simplicity Investment Watch. Today is Monday, November 25th. I want to talk about the major market movement that's been going on end of last week and today being Monday, and updates to the buy list. But first, the disclosure real quick. We do not give financial advice, and this information is not for investment decisions. This is for educational purposes. Stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is suitable investment profile for you, given your investment goals and objectives. All right, so for the major markets, this right here is the action for today. SPY, S&P 500, up 34 bips for the day. Since last week, let me change to my cursor. So this was last Monday. I talked about the gap here. I mentioned this in a prior video. Gapped up, Trump election, went up a little further. Then it looked like it was going to try to fill the gap. It did, to the extent that it came right in here for the S&P 500. And then this harami showed up. I've talked about that. Basically, harami is a pregnant candle. So we have the mama candle here. We have the baby candle here. The baby fits within the mama. When the mama is dark and the baby is either a hollow candle or a green candle, it's a bullish sign, or at least a possibility of being a bullish sign. And in this case, it looked like it absolutely was a bullish. Ever since then, the market's just been up, up, up. Same thing happened with QQQ for the NASDAQ. The action's been that way since the harami, which is this right here. It happened in both of these major markets. Did not happen in the Dow. What happened in the Dow is doji, which is basically indecision. And then it had another down day. It caught this anchor that I set up from a previous high right over here on the 21st. I have an anchor set off that. This bounced off that anchor, so the buyers stayed in control from that previous high and have just taken it up basically all last week and into today. In every case here, I have anchors that were set up off the gap. I have an anchor VWAP set off the high. And what we're seeing here is, yeah, there was a little bit of a sell-off after that quick ride up, but you can see that it's above the anchor VWAP now, and buyers on these various markets are back in control. I mean, today's candle action is not the greatest, but it's not bad. This dark candle means that it's down for the day, but it's up from the previous close. And we have wick underneath it and wick above it. So kind of middle of the road scenario on these. Same thing with this candle over here. In any case, it looks like it's positive. The buyers are in charge. Same thing with the Dow, the DIA, the ETF for the Dow. The anchors were set up from the most recent high and from the gap, and right here, what day was this? 21st was last Friday. No, last Thursday. Last Thursday, it closed above the anchor, indicating buyers were in control. I'd like to see a confirmation, excuse me, a confirmation candle after that. And that absolutely is, let me turn off my crosshairs. This right here is absolutely a confirmation candle. That's a strong candle. You also see the volume action that goes with it. I've mentioned that many times. You want to see good one happening with these moves up. actually, well, I'm volume now that I see this here. All these down, notice that we had candles, which was volume on those down days. I call, if you use the analogy of these are buildings, you want the tallest buildings to be green, obviously, if you're looking for an uptrend or a bull. So when this happened, the gap, there was a lot of volume. When the market started settling back down, it was more from a lack of interest or less, hence the volume's down. Then people started, they all jack in, and you can see that by the volume. So these are good signs, except for this candle right here. Regardless, there's been solid volume since. SPY, there's a lot of green positive volume candles going on here, volume bars, I should say. So all in all, as far as sorry, short trading week I wanted to bring up. So yes, we know Thanksgiving, happy Thanksgiving, or it's coming up Thursday. This is a shortened. I got to put a note of caution out there because on shortened trading week, speaking of volume drops off dramatically. Obviously, people are taking off for the holiday. Traders are gone. So the market is closed on Thursday. So we have 2 more trading days this week, and then even Friday, it's open, but it closes at 1 o'clock, so it's like half day. And we all know that there's not going to be a lot of participants. You got to be careful in those days. There have been instances in the Forex market. I know we're not talking about Forex market, which is the currency trading market, but I've had experience in that where when there's a holiday, or at least a half day or a quasi holiday weekend like what we're having, that the institutions have the ability to take over, and I've seen it on the Forex market, absolutely manipulate the market to the detriment of the regular Joes out there. So I'm not saying it can happen, well, not that it can happen, but it doesn't happen it's not as prevalent with SPY and NASDAQ and Dow, but just any trades you set up, just try to avoid, me personally, just try to avoid doing any activity on Friday. Maybe even Wednesday, half day Wednesday. Well, it's not a half day market, but people are going to be taking off. So just word to the wise. Today and tomorrow will probably be the best trading days. And then you probably just want to put everything aside. Not necessarily do any buys if you're trying to open up new positions until next week. December 2nd is Monday. So that's my public service announcement on that. For major economic news, we have tomorrow consumer confidence coming out. That can be a market mover. The FOMC meeting minutes, so the last meeting they had, those meeting minutes are getting released tomorrow. Sometimes the commentary that's in those notes can spook or excite the market either way, so just be aware of that. On Wednesday, preliminary GDP numbers coming out. Has a tendency to be a major mover depending on what type of news we're getting, so that's something to watch for. Unemployment claims come out on Wednesday. It's usually Tuesday. Tomorrow. No, I'm sorry, Wednesday. They're moving it up one day. It's usually on Thursday. They're moving it up to Wednesday. So the unemployment claim, it's expected around 215K for unemployment claims. So we'll see how that turns out. That could be a market mover. And then the real one to watch is the core PCE, which is the personal consumption price index. The Fed, that's one of the favorites of the Fed to watch. That one is almost like CPI, but strictly for the consumer. And that's what the Fed likes to see, given that consumers drive the majority of the economy. So core PCE price index on Wednesday, it could be a mover. All right, the buy list. I've made some changes. Markets are up, but I have a lot. I moved a lot here to hold. All these tickers that are in yellow are on my buy list, but I have a hold on them right now. I'm not taking new positions on them. Jeff, I would not suggest new positions on them. And it's actually not necessarily for the reason that you might guess. It's not because they're not performing well. In many cases, which I can show you on the charts, and I will show you on the charts, it's actually because they've moved a lot in the last week and they're getting extended. And if people remember from even my first video, our strategy is basically we're looking for consolidation. We're looking for uptrends. We're looking for consolidation or a pullback and the buying opportunity out of that before the next leg up. When these legs get extended, you can jump in, great, and say it went up 10% and it may go up another 10%, great. But that's not the way we like to play it. So what I'm seeing on a lot of charts, which I'll show you, is that they've really gotten extended, and I'm getting a little, concerned that it may be the wrong time to get in. I could be wrong, that's fine, but just go with what you know and do what you believe in. So so there is a lot that moved to hold, a lot for that reason. I've added down here on the 25th, so today is the 25th, I've added 3 new buys. 2 of these came from previous watch lists that I had. So I've been, obviously, I've said I have the daily screens that go on with the services that I use. They give me a list of stocks to work with. I further vet the list, et cetera, et cetera, et cetera, all the way down to, maybe picking 1 or 2 for the day to add to my watch list. Sometimes they go straight from that screen list onto the buy list if it's looking really encouraging, which is the case in Kroger right here. Kroger came off a screen that just came out after the market closed. I looked at it. I said, okay, yeah, this is good to go. The other 2, Shopify and DoorDash, came off various watch lists that I had. So I've added these 3. They're green light, good to go. And actually, I'll talk about a covered call strategy with Shopify. I think Shopify offers the best value. I'll talk about that too. But so these are the additions. And as I said, many of these others, they were, oh, one more thing I wanted to mention now, that Roblox, I've had that on there, well, since the 12th, it's right there. I'm taking it off. I put it in red, so next time you won't even see it anymore. It just, again, looking at the chart, watching it, it's not behaving well at all. So it's not worth our time when we have all this other stuff to look at. So Roblox is coming off, and I put that one in red. And as I've said, the stuff in yellow is on hold. If you have position in any of those, that's fine. I'm not saying sell. It's not a sell recommendation. It's just that just don't take new position in it. I'm just waiting for a better buying opportunity based on the technical reading of the charts. Okay, so going down the buy list, CPNG. So what I'm seeing here is, let me open this up. So right in this area right here is when it went into the TTM squeeze, which is the red dots down here, and then when it goes green, it fires. And since it fired, it really has been kind of lackadaisical, and I have anchors set up on a previous high and this high right in here behind the shaded area. And excuse me, these anchors are coming across here, and this candle from today is just resting against that. It needs to break through that, kind of like what this did over here. Yeah, so buyers are not really in control of this, and therefore it was a buy, and now I have it on hold. So that's basically the reason why. Oracle was the next one on the list. That one, this is a hold. It's loading. Same, here we go. We have an anchor off this high over here, and it went down. The action went down below the anchor. Sellers were in control. Buyers came back into control. This candle's not a good candle with the wick sitting like that and limited trading action. And then what do we have following that? Two red candles. And this one is actually a strong red candle, and we have higher volume to the downside. So, again, I'm not screaming sell or anything. Just I would not want to be buying this right now until I get a convincing close above the anchor. Next one on the list was Chewy. So Chewy's one of those stories, too far, too fast. I wouldn't want to be a buyer until I see consolidation on this. This right here was the TTM squeeze zone right in here. And then it came out of TTM, it fired, and it's done this action. And that action has been, since it came out of TTM squeeze, let's pick a candle down here. And right now it's sitting at 31% gain in basically 3 weeks. Well, almost 4 weeks. So yeah, great. I mean, the TTM squeeze worked perfect in terms of like picking this as a buy. Actually, I mean, to be honest, my buy was, I think, back here. But in any case, it has moved. Let me turn off this performance stick. It has moved a lot in a short amount of time, and I'm actually concerned about, it's overbought and that it's going to take a break, and that's not when you want to implement some of these bull strategies. So on on similar story. TTM squeeze right here. Since that time, it has moved 24% in 3 weeks. Not when I want to jump in. It's on the buy list. It's hold. I'm waiting to consolidate, come down and test maybe this anchor or anchors down here, maybe some other technical test point. But at this, listen, we all know it could move another 20% from here on out and keep going up. And y'all can just look at me and go, hey, look at you, you're wrong. But that's not what that's not the strategy. The strategy is to find the consolidation before the next leg up. After on, we have PayPal. So PayPal is on the buy list, and it's green. So this is a green light. Basically, it came out of TTM squeeze in this area right over here. Made a little movement up, and then it started to retreat. I put an anchor off that high. This action from last week, it closed above the anchor, great. And I like to see follow through. And today was the follow through. Not a great candle. We talked about this on SPY and NASDAQ ETFs, where there was this candle where it technically closed down from the opening of the day, but the close at the end of the day was still higher than last close, like the close on Friday. So that's, and actually even gapped up. And I'm seeing it on higher volume. That I'm not going to say the green candle is the tallest building in the city. This action is decent volume, but compared to the last 3 days, this is nice volume action for what was going on here. So PayPal's a buy. You're just going to want to screen for option strategies, Jeff. I know covered calls like the favorite or a caller, but this could be a candidate to consider. And now I'm going to not necessarily go through every single one on this list, but I went through those first few just to show you a sample of or example of there are some that have moved. They moved a lot in a short period of time, and therefore they're unattractive to me because they moved too far too fast, and that's not what I'm buying. And then there are some that just have had a little bit of lackadaisical performance, and I'm just waiting for them to prove themselves. Now, I mentioned on the buy list that there were 3 new additions today. One of them was Shopify. Shopify came off one of the watch list. Shopify reported earnings on the 12th of November, which is 2 weeks tomorrow, 2 weeks ago tomorrow on a Tuesday. And you can see that it popped. Significant gap. Now, one thing to be careful of is maybe the attempt to fill that gap. So keep that in mind. However, I have set anchor VWAPs off of the gap and then the following high that happened on the 13th. Sellers kind of took over, but then buyers stepped back in and brought it above the anchor. So I give this a buy. And as I'll talk about in a minute, when I shop for the best covered call strategy as far as value to go into, Shopify actually offers the best value. Jeff, take note. So take a look at this one, Shopify, and then compare that to the what you can get for covered calls on it, and I'll show that in just a few minutes here. So that's the story with Shopify, new to the list. Also added to list off of one of the watch lists is DoorDash. DoorDash, real nice strong trend going here. Went into TTM consolidation back in September. Since then, it has continued its trend. So this is not like a cookie cutter perfect way that I do this as far as looking for consolidation. But what I did see here is that it had this high on the 12th. And like you've seen on a few other stocks, there was a lot of activity. Then after the 12th, there was some pullback. I set an anchor off of the 12th, anchor VWAP off of the 12th, and then just to kind of see when buyers would step back in. And they have, and especially today, this candle from today right here, that's a beautiful story. That's opening. It was pushed down. It touched the anchor. It's funny how that works. And then buyers stepped back in and pushed it right back up to the top, so it closed at the top. So it forms almost what looks like a T or a totem, not totem pole, a telephone pole. So yeah, that's a good candle, and it was done with some volume. So Dash got onto the list, and that's a buy. And then finally, the last one I'll talk about, I added Kroger to the list today. This came right off the screen from today. It was one of my trend screens. So it was in TTM consolidation through actually for a long time, like half of October into November. Then it popped out of it fired, so it went green. And like so much of the other action, it moved up for a few days, and then sellers came in, or basically buyers went away. And I set an anchor off the high, and now you see the action from Friday where it overtook the anchor, and then today basically confirmation day. So, and if you down here, you'll see the volume. There's the definite volume with today's action. So, although there is a wick on the top, I mean that's not an absolute reason to say no, I don't like that candle. I actually like that candle a lot, but I would have liked to see a little less wick and more solid candle going all the way up. But the fact that this was done on a lot of volume, and this is just a follow through from what was going on Friday. As soon as I saw Kroger show up on my screen list, and then I looked at this as well as the other, my Lucky 13 and other technical indicators that I look at. Yeah, it got added to the buy. Here is the Lucky 13. A lot of the indicators are pointing up, uptrend. The rainbow of moving averages is this is just a beautiful thing since July. So it's in a nice long-term trend. And yeah, so that was added on today. So that was one of the three added. Okay, so let's talk about the covered calls. So I take all what's on my buy list that is actually green, like it's a green light go, not the holds. I just look at the green light goes and say, okay, what is the best value I'm going to get out there for different option strategies? I look at covered calls. I look at poor man's covered call, which I do want to talk about in one of these videos, and I'll get into it. Vertical spreads, so a bull put spread or a bear call spread, which are basically vertical spreads. You sell one leg and you buy the other, and I'll get into that in another video. But I look at the different strategies. Covered calls being one of our favorites and most preferred. And I run this through all full disclosure bar charts. yeah, barchart.com. But I set up certain filters because I'm looking for particular value. I'm looking for particular indicators, particular metrics. So this basically is the Simplicity Investment Watch buy list covered call filter that I set up to give me what is really going to be the best value out there on all the stocks that are on my buy list. And basically today, all it spit out for me is Shopify and DoorDash. And I've highlighted the ones that are most appealing to me. So Jeff, it closed at 111. So you can buy, and for anybody, for the benefit of anybody who doesn't know the strategy very well, it's that you can buy the 111, you can buy the stock, and whatever it opens up to tomorrow, just pay attention tomorrow and make sure it's a good day, a good market day. Don't buy it on a down day, but make sure that first candle of the day, that first 39-minute candle of the day is the way I look at it, because there are 10 39-minute candles in a given market day. So make sure that first 39-minute candle is a positive one. So we're starting off positive. And then you go in and buy it, whatever that price is. So this closes 111 for this example, because all this could change in the morning. We know that, but in this example, it's 111. I can sell, so I can buy 100 shares of Shopify at 111 a share. I can sell the call strike for 117. Excuse me, the call strike at 117, meaning I'm selling the right for somebody to take that away from me at 117. So I have the obligation to give it up at 117. They have the right to take it. They don't have to take it, but they have the right to take it. That's what they're paying me for. And what they're paying me, according to this at the market close, is that they're paying me $1.10 per one share of the option. The option is 100, represents 100. So they're paying me $110 just for the right to take it at 117, whether they actually do it or not. And that's my money, no matter what. So that I've talked about this in a previous video. In that scenario, so I say it's 111 that you buy it tomorrow. We don't know what it'll be, but say it's 111. I sell the right, the call, the 117 call, and then that expires December 6th, that contract. If Shopify moves to 115 and never hits the 117, obviously the person at 117 is not going to want to take it. I've got $110 for that contract, just selling that contract to them. And that all expires on December 6th, which is a week from Friday. So basically 2 weeks. And that $110 is basically a 1% return in 2 weeks. So you do that, you're already doubling them, right? That's, I mean, just quick math, average that out for a year, you're getting 24, 25% a year, right? If you just did that alone. And then you have a 5.4% gain from the 111 to the 117 price. So the whole strategy, if this got called away from you, so say Shopify does go to 117, it goes to 118, it goes to 119, it goes to 120. They can take it from you at 117, and between the appreciation in the price plus what you got for selling that contract, you could have a 6.5% gain potentially in 2 weeks' time. And again, do that all year long, and you're going to be making 214%. Doesn't always work out that way, so don't get all excited. But that's the beauty of a covered call. Because the risk is if Shopify goes down, you own it, but that's the same risk you have if you just were investing in Shopify for the long term. But here I'm saying, you know what? I'm willing to buy Shopify. I'm going to hold it to the 6. Maybe I'll hold it longer, depending on the price action. But if it gets taken away from me, I could have a 6%, 6.5% return. If it doesn't get taken away from me, I still have a 1% return for that time period. And there you have the covered call. And at the end of the contract, December 6th, I can decide, hey, I'm gonna keep owning Shopify. You know, again, I'm gonna analyze the charts, but I'm gonna say I just want to keep owning Shopify. I'll look at this option screener again, and I'll say, okay, what can I get for it? I sell another contract, do that all over again, and keep making money that way. All right. So the other contract to consider, Jeff, that I saw just on this from the market close today, and again tomorrow could be a different story, is if you're willing to go out one more week from December 6th, go down to December 13th, the Friday the 13th. That's a lucky number for me because I have the lucky 13 technical indicators, so don't be afraid of it. So December 13, if you go out one more week and sell that 117 strike, so you have a contract that's good to the 13th, you can get $1.50 for that, or basically 150 bucks. So you get a 1.4% return, granted over 3 weeks. Not as appealing as 1% over 2 weeks to me. Get it? And then you still have your 5.4% gain if they take it away from you at 117. So yeah, Jeff, these are of all the ones on my buy list. When I ran the covered call screen, Shopify clearly showing up all over the place on this one, and DoorDash showed up for one. I didn't pick DoorDash just because it's just the premium that you're getting on selling the call is just not. I mean, you're getting 6% if you sell the 190, but it just wasn't as appealing as Shopify. Hey, believe me, we're not going to cry if even if you went with the Dash or that turned out to be a better value tomorrow, you're still getting $116 for selling the contract. Plus, if the position gets called away from you at 190, and it's basically at 179 or 180, if it gets called away from you at 190 by the 13th. You have 6% appreciation. Total strategy basically gives you 6.8% gain. Annualize that to 137%. So that's it on the covered calls, Jeff. That's what I'd be looking at tomorrow. And this again, you got to verify everything. I know you know this, but just verify everything. Verify that Shopify is on a positive swing for the day, and that these prices are still as valuable or as or encouraging from what I'm looking at right now based on the close during the market day tomorrow. Make sure it's the same story during the market day tomorrow. And that's the story on the covered call. All right, so that's it for today. If you have any questions or you need to reach out to me, my email's right there, mark@simplicityIW.com. And I've mentioned it many times. The website, when it's live, will be www.simplicityIW.com. So thank you for your interest. Thank you for your time. And please click on subscribe if you're watching these. I really appreciate it. And I'd appreciate it even more if you'd click on subscribe. Again, just trying to find out the viewer interest on this. And again, it does help you find the videos, and you can set it up to be notified when the videos come out. So thank you. Not likely I'll have another video for this week, given it's such a short trading week. I may do one on Wednesday. I certainly would do one over the weekend before the next week start. So there might be one more this week, but I'll be honest with you, not likely. It'll probably be, I'll just get through the rest of the week and then put one up for next weekend before the first trading week of December starts. And all part of getting into the Santa Claus rally that we all hope that's coming real strong. So one more time, thank you. Happy Thanksgiving. And remember, keeping things simple is really smart. Take care.